Eagles and viewers at investing.com. Welcome to FACE, ForexAnalytix Community Experience. Hope you have a good experience with us today if it's your first time. So I want to start off with the Dixie. Yesterday we were here. I thought there was a chance for a third drive to a bottom. It fell short of that pattern and we had a nice rally and then a pullback here. So what we have in the Dixie now is its second higher low. So I still think that there's potential now. I'm taking the third drive off the table that this could be a break to buy. Of course, you're going to manage the risk under these lows, give it tolerance. But to me, it looks like we could end up rallying from here, maybe back to 120, 140. So as far as the individual currencies, pound's weaker than euro today, but again, euro reflecting the same picture, second lower high. After the big shot up in the pound, looks like we recovered about 61.8. So this could be a short with stops over the highs as well. Really almost confirmed, but didn't. What's even weaker is Aussie, same type of picture. Hard break yesterday at the close and recovery, lower high. Maybe it's going to be a right shoulder. Here's your left, here's your right. This could be a neckline. So I'm leaning towards long the dollar. Give me a Y if you're with me. You don't have to agree with me, just so you get the analysis on it. Okay, yesterday I said do not short US dollar yen because I thought there was very nice divergence and the yen did come back quite a bit yesterday. Here we go. Have this big rally here being contained by the 50-day moving average here. Excuse me, it's at 200. This may be all we have in the yen. So I'm not a long-term yen bull like some people are. In fact, I think the action's been tepid at best with all the risk on. We've had blow-offs in S&Ps, the bonds under pressure, and the yen should be trading, in my view, 115 already, not just get little bear market rallies from here. And what's really interesting to me is we were talking about the S&Ps and that yesterday we would know if the day before was real. To me, this was a classic stop hunt. This was a big down day that we had the day before yesterday. And then we recovered and made a new high, actually. The high here at 208, 2808.40. So we took everyone who shorted this day, having a reversal day, took them out of the trade. The high here was 207.60, so they had their stops there. They're out at 207.80, and here we are 6 handles lower. So be alert for a sell-off. And what's interesting to me on the indexes is the S&Ps barely made a new high. Okay, the NASDAQ did not make a new high. And even though the S&P did make a new high, when's the last time you saw a new high in the S&Ps with an RSI under 70? I believe this is the 1 hour time frame, yes. On the 4, it's even more glaring, same picture, new high, glaring divergence that we have here. So I think the S&Ps are vulnerable here. I don't know if it's going to have anything to do with possible government shutdown. Not sure what kind of dance they're doing in Congress to keep the government open. Maybe they can do it. But you guys know I've been talking about the relative weakness being the Russell. And look at the recovery in the Russell. Okay, maybe halfway back, maybe 61.8 back. But comparative to the Dow and the S&Ps, Russell really acting negative. Okay, so I think there's a chance this correction may be somewhat imminent to the downside in the S&Ps. Of course, a stronger dollar would help. In fact, I'm a believer that the weak dollar has been part of the tailwind for this move in the market, for this move in oil. Oil hasn't quite given us its, I hear someone talking, one of my partners talking.
Oh, it'd be me. I don't know how I unmute.
Oh, it's okay, buddy. So oil, I was waiting for one more pop. Oh, I'm stuck here. Here we go. We have one, we have two, so two scenarios. This could be a right shoulder. Maybe that was a high. Maybe we're not going to get the third drive, but just want to put things in perspective. I know Steve has talked about COT, that the commercials are more short now in oil than they were at 140. Okay, so if the dollar rallies and crude breaks, that'll be another headwind. A lot of oil shares have been one of the stronger groups in the stock market. And I know that Blake has some trades that he wants to do before data. Let me try and get the monthly up one more time. Okay, I give up. Anyway, I'm thinking this is it in crude, that if we were going to make a new high, I think we would have done it. Right now it's looking like a right shoulder. So you could call me a bear in equities and a contrarian bull in the dollar. Okay, Blake.
Hey Dale, how's it going?
Good, buddy. How are you today?
Good. But really, I'm looking around. It's really, disheartening how heavy the dollar is right now. But at the same time, and I'm actually quite surprised. I woke up this morning. I'm like, geez, how this dollar is just so weak.
Yeah, because that was a pretty good reversal day in euro yesterday.
Yeah,
so,
I mean,
it surprised me to see it up today as well.
Yeah, I mean, you had the dollar index. Well, first of all, let's just take the dollar, and you have this really strong, candle from yesterday. We did, and if you can see it right here, we did stop at the breakdown point. So, I mean, I guess I shouldn't be that surprised, but it still, is still, just the dollar's trading poorly. Now, there's reasons why there's reports that the government shut down. We might not have enough votes. The vote happens Friday night, so it's going to be after the FX market closes. So the dollar, unless we get some positive news like, oh, we got the votes, I mean, the dollar is likely to trade heavy going into Friday night, and so you got to be really careful if you're trading dollars. It's been very choppy. The dollar, well, it's been choppy the last couple of days. The dollar's been extremely heavy, as you guys know, and there's been, virtually no lift. I mean, we had strong Chinese data overnight and everything else. I'll talk about a couple of trades, very frustrating trades. Like I'm spinning my wheels this month, just so you guys know. Since the start of the month, I've been going around and around in circles. Like I shorted the New Zealand yen a couple of days ago. Like up here, like around this, I think it was like 80.50 or so, and I was sitting there from a couple of days ago, like right around here, shorting the New Zealand yen. It ripped up yesterday towards 81, and I just closed it. I closed it. And I took like a 27 pip loss after days of sitting in it, being profitable. Like 30 pips after the sell-off in equities, it barely even sold off, and they came back up again. I'm like, okay, well, I got to get out of it. Aussie yen, I think I lost very similar amount. And it's very frustrating price action. The markets have been, equity markets, I should say, have been stubbornly strong. The outside day that we had on the S&P from a couple of days ago, right here, that didn't play out. The outside day, I expected yesterday for equity markets to have some follow through to the downside, to see a little bit of a pullback, nothing. So the markets have been very, very resilient, as they have been for so long, the risk appetite. But at the same time, price action has been very choppy. It's been really difficult. So if you guys are out there struggling, and you're like, man, it is, it's hard. It really is. Fortunately, I made some money in the U.S. dollar Canadian yesterday to make up for some of my losses. I shorted the dollar CAD. I don't know how I managed.
Was that a wild day?
It was. I shorted it somewhere through here after the BOC announcement, and then I covered it down here, very luckily, you know, the guys and gals were in the chat room when I covered it like a 77 or 78, like right here, and then it ripped back up again. And I mean, it's just been, you know, like I said, I got really lucky there, and it's not, you know, I look at the dollar Canadian now and it actually looks fairly well bid. But, you know, it's the dollar, you know, it's like, okay, well, you know, is the dollar really going to, you know, rally ahead of the weekend with, you know, a government shutdown looming? You know, I guess it's possible, but we have to have some positive news out of the U.S. In order for that to happen. I actually got really lucky playing the pound to the long side yesterday. I shorted the euro pound. Now I am short the euro pound currently. We are below the 200-day moving average, and I think that it should trade lower. The pound looks extremely strong, but then again, you know, Sunday there's a vote in Germany for the coalition vote on Sunday evening. So that could you know, everybody expects the coalition vote to go through. That's an expected, but if it doesn't, then, you know, the euro could obviously come under some pressure. I don't think that's going to be the case, but, you know, it's been, like I said, it's been extremely choppy in the markets. The commodity currencies remain really well bid. Look at the Aussie employment last night. Unemployment rate came in a little worse than expected. The headline number a little bit better. The Aussie, if you didn't see it in Asia, this is what the Aussie did in Asian trade. It ripped up following the data, then came all the way back down, hit support, and it's been grinding up all night. And then Chinese data overnight, the industrial production numbers came in better than expected, so that's kind of lifted the Aussie as well. But like I said, the market there's been a lot of choppy waters here, and there's not been a lot of direction, so you got to be very careful. And if you're trading US dollars right now, I think in order for me to feel comfortable being long the dollar, and I bought some dollar Canadian just kind of scalping around, but nothing, you know, nothing like for me like, oh, I'm going to take a stance in the market. There's no reason really to be, you know, aggressively long the dollar for a bounce until we get back above 91. We get above 91, we might see, you know, a rally back towards resistance here at 92.5, 93. And if we avoid a government shutdown, maybe that's the catalyst that drives the dollar up next week. But is the dollar going to go higher between now and tomorrow substantially? I don't know. You know, as long as we're looming a government shutdown for a government possible shutdown, I don't know if that's really going to be the case. So you guys have to be very cautious trading the dollar for right now. You know, next week we might see a squeeze above 91. Should we avoid a government shutdown? But other than that, the dollar's probably going to trade with a little bit heavier tone. The equity markets this morning, just really quick, they've come under a little bit of pressure early on, but, you know, all in all, equity markets still look pretty bid at this point in time. The dollar yen, we squeezed past 111 yesterday. That was a nice short squeeze, and if you look at the dollar yen, it looks like we can go back and retest this 112 area. And if that happens, the dollar might get a little bit of a reprieve, a little, you know, just as we make a little bit of a recovery. But all in all, I agree with you, Dale, as far as the dollar yen goes. You know, with yields rallying, bonds selling off, equities being strong, the dollar yen should be well above the 113, 114 level, and we're just not. It's been underperforming. That's been one of the reasons why I personally, and let me get rid of this. This is something I drew a long time ago, just in case we broke out. But that's why I've consistently just stayed on the short side of the dollar yen, even though I'm not short it now. But that's one of the reasons why I've been shorting it up at 113.50 from late last year, and shorting it again in you know, the beginning of this month when we were up in near the 113 level. And you know, if the dollar yen should make a rally back to 112, I'll be looking at it with another possible you know, with the intent of possibly reversing and looking to the short side. Remember, we are also trading below the 200-day moving average, but we're also in the middle of like the apex of a huge, and this is a huge, let me go out to the weekly chart, huge triangle. And as every triangle, when you're in the apex of a triangle, the waters are going to be extremely choppy, and that obviously is playing out right now. We are very choppy waters with the dollar yen. I think ultimately we get below 108, we get above 113, 114, then that's going to give us some really clean direction as far as what to do with the dollar yen. So anyway, just a few things that I'm looking at. The crosses, and if you look at these yen pairs though, the yen pairs, actually I'm going to take you over to the pound yen, and then I'm going to talk a little bit about the pound. Okay, the pound, if you can see the pound yen right here, pound yen looks strong. We are in what I've always thought was we were in an ascending wedge, which ultimately they tend to reverse, but there still is the outside chance that we rally. And if you look at the pound yen, we're actually breaking above the wedge to the upside. Like I said, I played the pound long yesterday, and I still have euro pound shorts, which in essence is long the cable. But if you look at the pound dollar, and I want to take you over to the pound dollar, I had a pip established in the pound dollar for a couple of days, but it wasn't going down. And you know, I closed it, the pattern in play, because we came right up to the 618. I had to close my own trade for a loss because it just wasn't going down. And then maybe 30 minutes after I did that, we ripped up and we started squeezing. Okay, and because it looked like it was going to squeeze, but now we have tested the 50% retracement of the 171, whatever this high is. I have to look at the high, 171.67. That 171 all the way down to the post-Brexit lows. We're at the 50% retracement, right? Or excuse me, 38% retracement that came in at 130, basically 139, roughly. And it depends on how accurate your drawings are and where your broker or your data feed provider is going to mark the post-Brexit low. But the bottom line is the pound still looks pretty bullish. Now, the dollar is showing a little bit of life since the European North American crossover. We're starting to see a little bit of a dollar bounce. So the pound has come off a little bit, the euro's come off a little bit, but overall, I think the pound still looks very constructive on the long side. One thing I should note is the daily sentiment index. And if you guys, the paid service that ForexAnalytix that we get, and we look at every day, the daily sentiment index is running at 88 on the pound. That means that the market dealers are extremely optimistic with the pound, but almost you can look at it as more a contrarian signal when everybody is bullish the pound. And that's the scary thing about the pound right now is I think DSI on the pound is like 88, where the euro is more like 68 or 70 or somewhere in that neighborhood. So that does concern me just a bit, because the market is extremely bullish, the pound, and once everybody gets extremely bullish, there's a chance that the pound could pull back or consolidate, and that is a little bit of a risk as well. Hey, the Canadian's getting a little bit of a bid. And like I said, I picked up some dollar Canadian this morning, more of a scalp, but I'm really going to watch the dollar Canadian should we get above like 124.70. One of the things that Morgan Stanley noted in their overnight analysis, and I read obviously a lot of different brokerage firm analysis throughout the course of the day, but one of my overnight, typically my readings in the morning, they had mentioned, and one of the reasons why the dollar Canadian spiked the way it did following the BOC is they talked about NAFTA and the risk that NAFTA poses for for the Canadian economy, both the Canadian economy and the U.S. economy. But they mentioned it, I think, 13 times, which last time was only 8, so, or 7 or 8, something like that. And the reason why I'm noting that is because President Trump this morning talked about NAFTA, and he said, well, you know, if we pulled out, it'd make a lot of people upset. You know, that he was just kind of, you know, shaking the hornet's nest, if you will. But those concerns about NAFTA could continue to weigh on the Canadian, and that's the whole reason why we spiked up above 125 yesterday. In that spike high following the BOC is because they made so many references to it. And I'm just watching the Canadian, because if we can get a nice foothold above 124.70, 125, we might see some continued Canadian weakness, you know, if the dollar does recover. And it may be more of a Canadian story versus a U.S. story, where you can look at other Canadian pairs. If you're like, well, I don't even want to trade the dollar, which, you know, makes complete sense to me. You could look at like the Aussie Canadian. You know, the Aussie Canadian looks pretty bullish here, and the Aussie Canadian looks like we can continue to recover. Let's say you want to trade the Euro Canadian. You know, the Euro Canadian had a nice lift, and you know, we're really approaching. I mean, if you look at this, we're approaching multi-year highs in the Euro Canadian. And see, just I guess I can just start here. You know, you can see we're approaching some pretty key resistance. So if you don't want to play the dollar Canadian, you can always look towards other Canadian pairs. You know, because if you want to avoid the dollar because of the news flow that we might get over the next 24 or 48 hours. Let me see if there's any questions that have come in from our viewers this morning. And let's see.
Like covered a lot of ground, man.
Yeah, Tian says I've been a bull in the New Zealand yen since end of December. You know, I've been trading the New Zealand and the Aussie dollar on the bullish side for a lot of December, January, but not really so much the yen pairs. I've been trading like the Aussie dollar. This was my weapon of choice right through here when we had this descending wedge, and we came out of it and we retested it. And this is a multi-year trend line. So I traded the Aussie on the long side a lot of December until I stopped trading through the end of December. But they've extended a little further than I had thought they were going to. But one of the things that you might notice, like with the New Zealand yen and the Aussie yen, is we're now starting to struggle up here for this month. You can see I've been trying to trade this to the short side, and frankly unsuccessfully, because you know I pick it off and then go positive, and then it, come back in my face, and it's been very frustrating really this entire last couple of weeks. But I'm looking for it to possibly peak here, especially if equities start to look a little heavy. And even though inflation has been running, well, by a lot of metrics, it seems like inflation might rear its ugly head a little bit. It really hasn't on a consumer price level. So I don't know if the commodity currency long trades are really the trades to be in at this point after this extended of a move. So Abdul asked for the pound yen and the euro yen. I'm going to cover these really quick, and then I'm going to pass it off to my colleague Steve. Hey Steve V. See, I just call him Steve V because we covered the pound yen. Let's go over to the euro yen. Euro yen, very choppy waters here. Let me get rid of that, and let me get rid of this. And so the euro yen, okay, the euro yen continues to make headway, and actually I think we're in between fibs here if I remember correctly. I think I removed them because they were obstructing some of my viewpoints. Hold on, because they were kind of mishmashing in the way, but let me double check here. Yeah, so you can see we're past the 618, the 786 doesn't even come up for, and this is from the drop in, highs in 2014. It comes in, it doesn't come in for a while. So I'm looking more at extensions for the for the euro yen. But if you look at the euro yen, really, as long as we trade above this 134 level, still looks bullish. But you know, could we, see a high somewhere around the channel highs, which might be around 137.50, 138? Yeah, it's possible. Again, I think you got to pay attention to risk appetite. As long as stocks continue to stay strong, the risk of the euro yen moving higher is still good. Okay, and that's really how I'm looking at it. And I don't have much of a view at this point. I'm not really trading the euro yen, just because it's as you can see, it's like the New Zealand and Aussie. And I mean, this has been extremely choppy waters for the last 2 weeks. It is, or week and a half. It's just been a lot of up and down. I did manage to short the euro yen. This is like one of my really good trades as I stepped back into the fold, and I made a lot of money on the euro yen. I just given back a lot of that trying to short the other yen pair. So it's been very up and down, and I kind of left the euro yen alone after making the 200 pip gain that I made through here. I've just kind of, just been sidelined, if you will. But with that being said, I've got to get ready for the data that's coming out here in just a couple of minutes, because in just a couple of minutes we have Philly Fed, unemployment claims, building permits, housing starts. So I'm going to pass things off to Steve. Steve, are you here?
Hey, mate. Of course I am.
Hey, how you doing?
I'm good. How have you been?
Good. It looks like we have a pretty good group here.
We also have employment data from Canada, by the way, in 3 minutes.
Also, Lewis, yes, we record all our sessions. You can find it on our YouTube channel.
But this is the ADP looks like they're doing, the private sector's doing employment for Canada as well. That's interesting. Okay.
Yeah.
Looks like very low impact. So well, good luck through.
Not for the Canadian, perhaps.
Yeah.
Okay. So
right,
absolutely, we will.
Thanks, Dale.
Bye bye, Blake.
Thanks, Steve. Have a great one.
Hi, Nostrovolgi. How are you, buddy?
Hey, Dale. I'm good. I loved your interview yesterday, by the way.
Oh, thank you very much. I had fun.
Perhaps you want to put the link here in the chat for people to watch later if they wish.
Okay.
I think it was a good one.
I could do that.
Okay, so Stale, are you here, by the way?
I am here, and I just put the link on the chat as well. So
okay.
For Dale's interview.
Okay, good. So let's first go over the data. Let's go over the data that we have. All right.
Yep.
Yeah.
And which is coming out in 1.5 minutes. Okay, we have enough time to see, I guess, like a couple of charts. First of all, I want to start with the pound, because there is this channel that I'm monitoring. Yesterday, it seemed that we're breaking above it and accelerating, but actually we reversed near the end of the day to close right on the triple confluence of the 61.8 from the pre-Brexit high to the very lows we had in 2016. The 127.2 extension from this corrective move lower, and the channel resistance. So yesterday we actually managed to close right there, although we were quite above it during the day. And unless we reverse today course once again, then as it seems we're going to be breaking above it, in which case the next area of interest for me is the 140.47 level, which is the 161.8 of this move lower. So I will be monitoring very closely how the cable closes the day, because I think it's going to be quite important due to technical reasons I mentioned. And we have a lot to talk about, and we have a lot of questions, so I'm going to go over them, but let's first have a look at the data. They should be coming in within a few seconds. Let's see, as always, USD yen. Let me switch to USD CAD here as well, because we have some Canadian data as well coming. So here is the USD CAD in the middle of at the bottom, and bottom right we have the USD yen. So let's see what kind of response we get before we keep on covering the rest. Data should be out.
Actually. Yeah, it's a
Go
bit
ahead,
mixed.
Celia.
Building permits is stronger, housing starts weaker, claims,
Housing
jobless
starts a little
claims.
bit weaker. Yeah, I see.
Yeah.
Field Fed is quite weak actually, 22.2 versus 25 expected. What else?
Initial jobless claims much lower than expected, but continuing higher than expected. So it's kind of a mixed bag, I think. And what are we seeing in terms of market action?
Fed prices paid is quite higher actually. That might be a lead indicator. New orders very weak. Employment weak. Yeah, you're right. Actually, it's mixed bag of data. Fully fed manufacturing, which is theoretically speaking, the most important of the news we were expecting, along with building permits. Building permits came a little bit higher, but fully fed manufacturing came more than 10% lower than what was expected. Okay. Let's see how the dollar is reacting before we keep on. Actually, I see a very muted reaction.
Yeah.
So yeah, let's keep on covering what. Yeah, it's mixed data, and to be honest, the vast majority of them was secondary data. So we would have to see like very big misses or but much better numbers than expected to actually get a big reaction from the market. Okay, so having to do now with the Euro USD, before I start answering questions, it's more than obvious that first of all, yesterday we had an outside day. That's usually a bearish event, but on the other hand, as we said, yesterday in yesterday's webinar, even if we see a move lower towards the 121. Which we had these two highs, even if we go a little bit lower than that, for the time being, there is nothing that shows, overall a bearish euro or a potential of a bearish reversal. Even if you go down to a 4-hour chart, you can easily see this as a potential bull flag, right? I'm not saying that it cannot correct lower. As I said, 121 might act as a magnet. We might get there. But for the time being, there is nothing bearish with the euro as well. So nothing bearish with the euro, nothing bearish with the pound yet, which obviously means, since they're two of the most major components of the DXY, it means that for the time being, we're not seeing any real danger for a reversal here. Yesterday's candle was quite bullish. We actually made a morning star formation. The last three candles, I'm ignoring today's candle, was a morning star formation. So there was a potential, because we almost reached here at 90.03. We had the actually 90.10. So we actually touched it. We touched today exactly the target of the head and shoulders formation. So this is a head and shoulders formation we were monitoring, and its exact target was hit at the lows today. So we had set two areas as possible areas for a rebound for the DXY. One of them was upon completion of the head and shoulders, which we, as I said, we touched yesterday and today. Okay, give or take 2, 3, 5 pips, doesn't really matter. And the second area, if we actually broke below it, is the area that's around 88.5. Why? Because there we find, first of all, the 61.8% correction, the 61.8 fib from the lows that the dollar made in 2014 until the highs of the bull run. And we also find the 127% extension of the last move higher, the last leg higher, the last bullish leg higher of the dollar. So if we actually fail to rebound from this level, which being honest seems quite possible, so far we haven't seen any real potential of a reversal, then I think that the next area that will attract price action is 88.5, which is quite a bit lower from where we are. So that should mean that we would have several days of dollar weakness at the very least until we get there. Depends, of course, on how choppy and how slow or fast price action proves until there. So watch this level unless we see a rebound starting today. Now that we touched it, I think that 88.5 will attract price action, as I said, which means equivalently, you can be looking for a for another leg higher, likely in the euro, since it's by far the biggest component of the DXY. It's 57%, and likely the pound as well. But as I said, let's see, because yesterday we got an outside day in the euro. Yesterday we also got a rejection from this triple confluence, and although we were trading higher intraday, we ended up closing just on the triple resistance. So, there is potential for the day to close in a different manner, but until that happens, you should always favor what the trend has been showing. And the trend has been showing that, the dollar was weak for the first 9 months of last year, and it resumed being weak during December, and so far this year, and it's already been more than half a month. It's been resuming its path lower. Okay. Now, having to do with the Aussie, we did a lot of micromanagement yesterday in the chat room, having to do with Aussie. Personally, I took advantage yesterday of the move. We were looking actually at a 4-hour chart of the Aussie and the potential Elliott wave count yesterday, European night. So let me show it here. And there it is. Okay, so we were doing some Elliott wave analysis yesterday here in the Aussie, counting where it might reverse. So we counted 5 waves higher and an extended 5th wave. That's why I actually added, and I said to the chat room at 80-20. So I almost stopped it because I needed to get my cost average at a better level. So I took my cost average at 79.42, and when we came down a little bit higher than that, actually I closed half of my position for just 20 pips of loss, because I wanted to reduce further my counter trend positions. I did the same when gold moved lower. So now, instead of having increased size as I have less than my usual size in all the 3 trades. I have the SPX, the gold, and the Aussie, and I'm still expecting that perhaps the Aussie will give us one more move higher here before actually rolling over. Yesterday's short-term reversal was nice, but I need to see more to believe that there's not more upside. But in all honesty, we talked about 2 things. First of all, the structure shows that it is very likely that the move higher, which initially we counted in a different way with Greg as well, because we had discussed it, the move higher has a much bigger potential of not being a corrective one. Initially, we were treating this as a corrective one, as an A, B, C, but then it proved that it's not something like that. In which case, we will be a lot more conservative with our downside targets, which means I'm going to be happy by seeing a retest of this 79 area, 78.5 to 79 area. And I'm going to probably be bailing out, taking some profits if we go back there and see how the Aussie is going to react. I might even actually end up buying it. Depends on how it reacts from there. The situation with the Kiwi, I have no position there, is more or less the same. It has extended more than expected. It has been hitting one upside target after the other. There you go. And the next area of resistance, obviously, if we leave, if we break above these highs, is the 78.6. It's also the closing high that we had over here and some lows that we found over there. So the next resistance is almost 100 pips higher. And so far, the uptrend in the Kiwi hasn't broken. You can see this trend line. We have been respecting it very well. But here as well, you need to notice that we do have some clear RSI divergence. So in both the cases, regardless of if it proves that that's a first leg of a move higher and we have more upside, we should at least see a correction manifest, and it should do so quite soon. Because a lot of signs have started accumulating that that might happen in both the pairs. So I'm still inclined to be looking to the downside, but I'm not that certain anymore that the move lower is going to be anything more than a corrective move. So in essence, not sure it's going to produce much more than 100 to 200 pips of downside, okay? Instead of bringing new lows, which we thought would be the case for some time. But you know, that's why you have to monitor price action, because the building block is always be looking at an impulsive move to be followed by a corrective move and then another impulsive move. But obviously, the market produces turns as well, which means that after an impulsive move, you see another impulsive move to the opposite direction, and then you realize that the trend has changed. That's why you need to, instead of being rigid, to be flexible, and you know, instead of trying to make a position work because you want it to work, to make sure you need to handle it in the way you need to handle it. So now, what I'm trying to do with my position is, you know, get out of here with no loss or a small profit instead of looking for a big profit, because the structure is likely different than what was expected in the beginning. Let me see, because we had plenty of questions actually. So let me see what Blake covered. I've been seeing. I think he covered the Eurozar. Oh my God, Eurozar. Okay, I'm going to cover that fast because I'm pretty sure that a lot of people don't care about it. But I'm going to tell you something about the Eurozar. No, I don't see an inverted head and shoulders formation in the Eurozar, simply because, as you see, the Eurozar found a high. It came back in the channel, retested the 61.8. It's breaking down in an impulsive manner. This move is impulsive. And the current structure that I see in the Eurozar is likely a pennant. So I would really expect it to move more to the downside. And if we should talk about the head and shoulders formation in the Eurozar, why don't we talk about this one? Instead of trying to find an inverted one. So, no, I would be very much bearish the Eurozar from what I see here, and definitely not be looking to buy it. Also, keep in mind the huge interest rate differential. Being long the Eurozar will also cost you dearly. Holding, I mean, right? So I think the path of least resistance in the Eurozone remains to the downside, since we got that big reversal there. And I really believe that this formation has a high chance of breaking to the downside either now or, you know, this chop or the slow grind higher might continue. But let me be very clear. This move lower is clearly impulsive. This move higher, you can see its manner, is clearly corrective, okay? You see in what speed and momentum an impulse is moving, and you see how a correction is moving, right? Slow, overlapping price action that within several days has retraced a very, very small percentage of the move lower. So, in my opinion, you know, trying to be long here is very, very dangerous. Very dangerous. Okay. Let's see. Pound yen and euro yen. Yeah, Abdul asked for it. Blake actually covered it. Let's see USD CAD. USD CAD is rebounding once again from the 61.8 actually. You can see the move here. Yesterday we had a very choppy price action. Actually, yesterday we closed with a doji, which is, you know, which is the last thing somebody would expect during the day, because we had wild price action to the upside, wild price action to the downside at some point, due to, you know, BOC volatility, of course, as well. And we settled that being unchanged. But as far as I'm concerned, even if we rebound once again from here, which was a very nice level, it was a 61.8, it was also horizontal, it is also horizontal support, I would be very, very cautious, because first of all, you know, I see a couple of interpretations that they would be bearish. One of them, this might end up being a triangle, in which case that should happen. Second interpretation, and as I've said plenty of times, you cannot guess a corrective price action in advance. You can just keep monitoring it and seeing in what kind of thing it manifests. It can end up being like a bull flag, something like that. So we might go all the way there. Or third of all, it might be something a little bit more irregular, right? But either way, unless we break above this, we had a range, you know, for several days, and the floor of the range was the 126.50 area, let's call it roughly. Unless we break above 126.50, in my opinion, personally at least, I'm going to be inclined to be looking at it in a bearish manner. So I'm going to be looking to sell rallies instead of buying dips. So that's my opinion. We can easily move perhaps to 126.50, but you know, I doubt that moving above there is going to be an easy task. So that's what I see with the USD CAD. Let's see what else we have. No, that was not his speakers that you heard on Blake. Blake had Bloomberg Squawk speaking on the background. Pound dozen, pound kiwi, by the way. Let's have a look at them. And since I'm answering questions, whoever else has questions, you know what you should do, just type in. Okay, price action has been rather choppy after we got the rebound, but seeing, you know, how strong that day higher was, this slow and choppy price action tells me that perhaps we're going to get at least one more leg higher, at least. So I'm seeing, you know, a decent potential, regardless of what happens after that, for a push towards the 175.50 area. Now, if we see a rejection from there, you know, it's going to be an event that I will strongly take into account. But if we actually manage to penetrate above there, then there is a big likelihood that the move higher is going to resume. Regardless, high potential for the next leg to be higher towards there, and then we take it from there. I mean, we see what happens when we test that area, and we judge what's next. Pound kiwi, on the other hand, you know, we had a well-defined area marked here as resistance. It was the confluence with 38.2. It was also some horizontal support resistance area. So far, it has been rejected from there. That doesn't mean that I would turn bearish, you know, outright, because we had that very, very big candlestick there, which usually gets respected. I would more or less be inclined to be expecting one more leg higher here as well. But I need to see more to be convinced that we actually found the bottom. Okay, and that was the end of the correction. It is, you know, it is a high probability, because in both cases you can see here we had strong breakouts from bottoming formations. So, you know, I would give it a little bit of a higher chance for us to resume higher. But, you know, since the short-term price action is not very clear, I think you need to be a little bit more patient. So I wouldn't be jumping the gun with either of those two until I get confirmation that we found the bottom. I'd rather have confirmation and, you know, benefit a little bit less from the resulting move than the opposite. Okay. I'm expecting a pullback on the euro-yen, Ari is telling us. Let's see why you're expecting a pullback in the euro-yen, Ari. Let's go here. Okay, a few comments here. First of all, I see nothing bearish with the euro-yen yet, right? It's a series of higher lows that started 1.5 years ago. So in essence, the euro-yen has been in an uptrend for 1.5 years, right? You can clearly see that. We found the bottom there, and since then we have a series of higher lows. And although we stalled for a very, very big period of time, we were trapped here for a couple of months, we finally broke to the upside. Then we fell down once again in the range that looked like a false break higher, only to reverse once again. And personally, I see the highs being threatened once again, right? If you go down to a 4-hour chart, this looked like to me like a triangle or a flag. You can interpret it as you want, but bottom line, I see another attempt to break higher from here. So, you know, the less bullish scenario you see here is this to be a short-term fifth wave higher, might test the highs once again, might penetrate a little bit higher, but still I would expect a corrective move lower then and not really a reversal. But I have to tell you something. I don't think that the euro yen is the pair you should be at the moment, because this kind of choppy price action can really chop up your trading account. I think it's rather better to, you know, to choose something that has, you know, much clearer pattern. Euro yen has been quite slow since, when was that? September. If you see, I mean, we started at the middle of September last year. We were at 132, and then we spent a huge period of time being between 132 and 134.50. And now we've expanded the range a little bit, but still, it's too slow. It's too choppy. I think better opportunities out there, you know, unquestionably better opportunities out there. Ronit asks about the bonds. Sure, actually, let's have a look at the bonds in general. And let's have a look at an interesting dynamic here. So let me start from the treasuries, because I think this is rather interesting. Okay, here are the treasuries. As expected, Grega, first of all, we had said plenty of times that this was treasury, by the way. Okay. The next area of support I have here is the 127% extension of the corrective move higher, which is at 121.80, by the way. So the treasuries are breaking lower. There's no question about it. Being on multi-year lows always means something. RSI being at 25 also means something. The question is the following. We are breaking to new lows in the treasuries, which means that the interest rates are breaking, you know, to higher, they are moving to higher levels. And yet, the dollar, which has just overlapped here, instead of having an inverse relationship, as it usually does, you can see it here. Let me mark it. Treasury is moving higher, dollar moving lower. Treasury is moving lower, dollar moving higher. That's because treasuries under yields are in an inverse correlation. So that means that you know, the dollar and the treasuries are in inverse correlation, right? So lower, higher, lower, higher, lower, higher, higher, lower, and now in the short term, this relationship has changed to a positive correlation. Treasury is moving lower, which means yields moving higher, but at the same time, we have the dollar moving lower, right? Treasury is lower, dollar lower. That's due to a big part, you know, to what's happening with the bonds. So that's not like a huge mystery. It's because the bonds, the whole thought process here is the following. The major component of the DXY is the euro, and the interest rate differential here is as follows. treasuries are moving lower, yields are moving higher in the US, but at the same time, if we go to the bonds, you'll see that the bonds, have been moving faster to the downside after we broke out of this diamond formation. In my opinion, it was a diamond formation, more or less. That's what we saw. So due to that, we're seeing that weird relationship, which I don't think is going to last for much longer. But speaking about the bonds, be very careful, because if we actually break below this 159 area, things are going to get really, really, really wild with likely the Euro USD and in general with the Euro. Okay, so I think that this area is going to be a magnet. It has acted as support and resistance multiple times, but really, if we break below here, then things are going to get very, very wild. So, in my opinion,
excuse me for interrupting. Is a bond a 10-year piece of paper like the notes are
yes.
here?
Yes.
Okay,
yes,
and do they have a 30-year?
Of course, Germany does, of course.
Okay, so is the same thing happening in the 30-year where the front end of the curve rates are going up faster than the back end?
I haven't looked at it, to be honest. That's a good question. I'm going to look at it afterwards and let you know. I mean, if the yield curve is flattening, that's what you're asking.
Right, exactly.
Yeah,
I'm going to. Inverting is what I think may happen if the Fed continues on their course. So.
Yeah, as the adage says, there's nothing good coming out of the flat yield curve, right?
Yes, nothing good. Just go back in history.
Exactly. That's very true. That's very true. So bottom line, in my opinion, one of the most important charts that any FX trader should be monitoring at the moment is this chart, the bond chart. Because as I said, if we break below 159 in the bond, things are going to get very wild with the euro, very wild with the euro. And I know that the ECB wouldn't want that to happen, but the market has proven that very often and in many occasions, the market has the strength and the potential. We've seen that in the past in the 80s with the pound. We've seen that recently, a few years back, when the S&P had to abandon the floor. There are more occasions as well. But in any case, Bund, extremely important chart. I mean, I'm looking at it every single day. I'm not trading it actively, but I'm looking at it every single day because it correlates and it will play a big role in many of the things we used to trade every day. Okay, so I can't stress enough how important this chart is with anything euro related and probably not only. Let me see what other questions we have. 86 to 84. Ronit says that DXY below 91 is 86 to 84. No, as I said, I'm looking for the 8850 area in case we break the current lows in the DXY. I don't think that the 86 area is the next important one in the DXY. I think the 8850 is the next important one because we have double support level there, as I showed.
Show them that chart, Steve. Show them why. 88.5 is important.
I showed it before, but let me show it again. Because it's a double support area here. It's the 61.8 from the move higher that started in 2014 to the highs in the dollar. It's also the 127.2 of the last corrective move that we had during the end of the year in the DXY. So both of them are one a little bit above and the other one a little bit below the 8850. That's why I think that this 8850 area is a nice confluence in a sense of supports. And the next area after that is we have another more or less confluence of supports. It comes a lot lower, then we go down to 84.5.
They've grown its target. I've heard we're bandied about too. So
yeah, because that's the 78.6 and the 161.8. But I think it would be a major mistake to ignore this area and directly be looking for this area. Because I think that if we get to this area, which is likely, very likely, the sentiment having to do with the dollar is going to be even more extreme, and I think that it's going to be bound for at least a decent pullback before getting there. So I'm not saying we can't go to 84.5, but I'm saying we also wrote an article with Blake and Stelios about it. You can go to the ForexAnalytix blog. It's free to watch for everybody. You just go to forexanalytix.com. Stelio, you want to put the link to the blog and the blog post?
Yes, I will do that right now.
Okay. Thank you. So as we wrote, we do believe that the move lower in the dollar should resume, but we doubt that the speed is going to be equivalent to the speed that we had in 2017. So we expect that 2018 for the dollar might be another weak year, but at the same time, it might have a lot of periods of rebounds, choppy price action, etc. So looking after this kind of a move that we had in 2017, for like straight moves or accelerated moves is probably too optimistic. Okay, so I think that if we make it here, I'm actually going to be buying a lot of dollars if we make it down here. Let me be honest. I'm going to be looking for opportunities to be long the dollar against many currency pairs, not the opposite. Okay.
Great review, Steve. Great review. And you know what? You're talking about making it there. If you can't make it here in face, you can't make it anywhere. So really, great review. You covered a lot of ground, and I have Kevin Hunt with us today. And,
perfect. Enjoy the interview, Dale.
What a great lifestyle he has. I'm going to put him on right now. Kevin, thanks for hanging out with us during our session today. I'm going to make you the presenter. I've been looking forward to speaking to you for quite some time. Welcome to Face. Just waiting to hear your voice and see your screen. There it is.
Yep, are you hearing me okay?
Got you, Kevin. Very nice to meet you. I mean, we've known each other over Twitter for a while, but nice to finally be able to say, hi, Kevin, how are you today?
It really is good. I've been following you for some time, admire all what you do, and just listening to you guys talk there, I feel kind of lazy. You know, it's almost like I'm sitting back in the grass with a piece of straw between my teeth and taking it easy the way I trade compared with what you guys are doing. It's well,
you know,
very different.
If it ain't broke, don't fix it.
I certainly won't. I'm going to stick with it.
You know, I really love your handle, and I believe it describes your lifestyle, UK to Asia. So you split your time between, am I guessing correctly, Thailand and the UK?
That's right. Yeah, my partner, she's from Thailand. Initially, the Asia thing came from time I spent in India, but yeah, my partner's from Thailand, and we split our time between London and just on the outskirts of London and northeastern Thailand up in Udon Thani. We've just come back as it goes.
Wow. So you're lit. You know, a lot of people dream of having a life like that. So you can go with the climate. You could be in the UK when it's nice and get out of there and go to Asia when it isn't.
Almost. There's still some commitment. There's still some commitments here in the UK, which is why I'm back here in this horrible grey, cold weather at the moment.
Okay, so Kevin, I'd like to take you back to your beginnings, your entree into the industry, into trading. How did it happen for you? And did you have any influential people that guided you along the way when you first started? How long ago was it?
Well, I stumbled into it really. I owned many different kinds of businesses, been running and starting and running many different kinds of businesses. Ended up with an IT company that I was looking to sell that would have set me up for life, but through a rogue business partner, I lost everything. Found myself spending a bit of time in India, and it was on a flight on the way back from India to the UK that I met up with a guy who was a Forex trader. That was what initially sparked the interest. That was in 2012, March 2012. December 2014, I was in a completely different environment, different circumstances, and we were in Thailand. I was with my partner in Thailand, and sitting by the pool, and something popped up on my phone, and it was one of these ads for brokers.
Oh, I married her already.
Yeah. So, it was that sort of like, I'm sitting there and I had lots of time on my hands, so I thought, let's have a look at it. And I went onto a demo account, started playing with it. And then I started looking into different aspects, different strategies, different traders to follow, wasted a lot of money and time, not realizing that the strategy wasn't really quite so important, but it was more a case of looking at myself.
Okay. Yeah,
Back
so
in
it was
June,
getting your psychology straight.
it really
How
was.
long
I didn't understand that. I thought I was going to follow someone's trading and just, you know, make it overnight and just copy exactly what they're doing.
Yeah, there are a lot of lazy people out there, but you know, there's nothing like drawdowns and taking losses. In fact, I think that's really was behind the explosion of self-directed trading, Kevin, that after 2000 and 2008, everyone who had, you know, a salesman for a broker with their 401k or their pension plan or even their individual accounts said, you know what, if I'm going to lose money, I'm going to do it myself, because those models failed people twice. So they said, I'm going to learn how to do this and not depend on anybody. So that's a great intro to what you did. How many years would you say, you know, so you started in 13, so you're in your 5th year of trading, before you started to become consistent and, you know, wake up every morning? I know it's never comfortable to trade, but just having had the experience, which you can't learn, it only happens over time, to where you get up every day and, you know, you see things and you can act on them. Would you say that you're there now?
Yeah, absolutely. Yeah, I'm quite comfortable with. I mean, this week's been a losing week for me. It's not been that good. The markets have been the way that I trade. It's not been that good. I've lost. Trying to think. Well, I'm probably down this week. I'm up for January, but I'm down. But it really doesn't bother me anymore. You know, I just know that you've got to expect these losses, and I'm absolutely fine with it. Perfectly comfortable with it now. Would you
describe your trading as? I know you're with Kim, correct? Don't you run her Asia room?
I run the London trade plan for her Wednesdays and Thursdays.
Okay, Kim's a pro. I've noticed that you guys mainly scalp intraday. Is that what you do?
Scalping, I'm not sure. It depends how you define scalping, but we're day traders and we're in and out of the market and we're flat at the end of each session. So we don't hold anything overnight or over the weekends. So that's quite nice, not having any discomfort of an evening or of a weekend. You can actually relax and forget about the markets completely.
Okay, so I see you have a 15-minute chart up here. Is that the main chart that you day trade off of, your 15-minute, or do you?
That's the 15 minutes.
You drill
purely
down
the 15 minutes. Yeah, that's it. That's all we trade is 15 minutes. And
okay, so you take the trade and manage the trade off a 15-minute chart. This is your time frame.
Yeah,
your only
absolutely. Time. Yeah, I mean, coming into the markets, I don't even think about this before I start. It's you know, walking into it usually half an hour before the New York Open or the London Open, depending on which session I'm going to be trading, and what the price action has done overnight, and combination from that. So we can see here the EU. This is what we'd call a clear directional move to the upside. I'd be looking for a pullback to get into a trade here. So, but with this, you can see I'm on a trade at the moment with this. I took this on the news a little while ago. The US dollar building permits news, it came out at 13:30 London time.
So I see you trade really completely naked. I don't see, it looks like you have some pivot points up there, some dotted lines, or, that's just your target price. So really, right, you're just, okay, so you're really just trading what you see without any indicators, without any fib levels. How do you determine entries, targets, and what your risk is on the trade? Does that blue box, that light blue box down there, have anything to do with how you're structuring the trade you're in now?
Okay, let's take it as if we're trading the New York session. The way we'll do it, this grey box here is showing the Asian session. And we use that as a guide. It's just sort of like a starting point for us. So what we do, we look at what's happened throughout the Asian session and throughout the London session. Okay, so we can see here that price came out of that Asian session and it's been moving up. We'll see that as a clear directional move to the upside. Now, to take a trade on this, we'll look for what we call a yellow line pullback. So if I wasn't in this trade now, I'd be marking a yellow line on this previously closed candle, and I'd just be waiting for the price to pull back to that candle, to that level before I'll take a long. I'll be looking for further upside movement on this. Our take profit levels are set at 0, 0, 2, 0, 5, 0, and 8, 0. As simple as that. It really is the simplest, easiest system that I've ever found. I've tried many, many different ways of trading, but this is so simple. There's no prior analysis needed. We can walk up to the charts, look at what price is doing at the moment that we approach it, and that's how we determine how we're going to get into a trade. The other way, if it's not in a clear directional move like this is, we can see here that, say the AJ, the Australian dollar Japanese yen, price overnight throughout the Asian session ranged. It didn't break out either to the high or to the low. And we can see now coming into the New York session, it's still doing the same. It still hasn't broken out of that range. So I wouldn't touch this until it actually broke. I'd take it as if price broke out.
So your targets, I'm thinking about what you said prior. Your targets are just monetary pip targets, not based upon, moving average or fib extension. They're just monetary goals of how many pips you're seeking.
Pip levels, that's right. Yeah, we're looking at levels to reach. And what we do, I mean, once price starts moving up, as it is, 1 second, let me just change over. As price has moved up here on the EU, once this reaches 25 pips above where I got in, I'll move my stop to break even. So I'll move it up +2 pips, +3 pips to cover the commission or anything else. So if the price comes ratcheting back down, I'm not going to lose anything. I'll break even on that. But leaving it open like that and just following it up with the price stop, it gives me a chance to let that trade breathe and move and get a nice win, get a nice win with 2 to 1.
You take partial profits at different pip levels, or how do you determine? Go ahead.
No, absolutely not. Just get in, let the trade run, and take it out at one of the levels. Or if it comes back to my price stop, it will take that price for me wherever my price stop is. So I don't scale in or scale out at all.
Okay. So let's go back to where you were on trying to describe what you're seeing. I think, was it AJ?
AJ, yeah. So with this isn't a clear directional move. It's in a range. So we'll be looking for a range break. We'll take a trade as it breaks out the high of the range or the low of the range. And the same once we're in that trade. There's lots of other nuances, lots of other aspects to take into consideration when we're taking these trades. Obviously, I'm not going to go into complete detail because it's what people pay for with Kim's mentoring. But it really is such a simple system to be able to get on board this. And if
would you say that Kim has been the most influential? I mean, you're using her stuff, the most influential mentor that you've had in your trading career?
Absolutely, without a doubt. It's strange because starting off, I was pretty green and I was looking at these different mentors, and I did spend a lot of money and I lost a lot of money. But I stumbled across Kim. She did a podcast, an interview with someone. Listening to her, you've spoken to her before. I don't know how well you know Kim, but and I know her very well now. She really is a decent person, very, very high integrity. And that came across in the interview. So I signed up with her, started following the system. Found it.
I like her.
She's a really decent person. She really is.
Yeah, she's a pro, I can tell. I've talked to enough people, Kevin, that when I talk to people, I know what I know and can tell if they know. And I've interviewed Kim before. She's
that's right. Twice I think you've interviewed her, yeah. And she's a really decent person, honest person, and very, very fair as well. And so, I started following her, followed the system. The system itself is very easy. Within a month, you can learn you can learn everything about the way she trades, inside and out. And then it's all down to you, of course, with the psychological aspect of it.
Does she help you? Did she help you with your psychology? You said that was part of your problem going in, what was the most important thing you learned from her?
She really did. I mean, the biggest turning point for me was discovering the Trading in the Zone book by Mark Douglas. That was a fantastic book.
Yes.
But no, she does these weekly webinars every Wednesday. And once a month, she'll do one on psychology. And she really is, she's not a psychologist, not a trained psychologist, but she understands this game, and she understands, she's been through the ups and downs like everyone else. And the way that she puts it across, the lessons that she teaches regarding psychology. Her website, she's got lots of these, every webinar she does, she puts a video on her website, so you can go back and go over the psychological aspects and the psychological teachings again. They made a massive difference to me.
I noticed that you also have your own website.
I do, yeah, that's right, yeah.
So I mean, this would be a good time if you wanted to show it. And I went there, and your first student was your quote unquote partner. That's
right.
You could teach. You could teach a partner to trade anyway.
Let me tell you a little bit about that. I learned Kim's system. My partner, I come from Southeast London. I grew up on my wits from a real tough, hard knocks area. Yeah. And, you know, you had to live by your wits. My partner, she grew up in Thailand from a Buddhist background, very calm, very methodical, very accepting. And I thought it'd be interesting to see the difference, how the journey I'd taken to get through and the journey that would take her through it. And she was interested in learning how to trade. She learned it in no time at all, simply because the method that we trade is very, very simple. But more than that, she already had pretty much the mindset in place because of her Buddhist background. So it made a big difference. Website, I'll just bring that up quickly for you.
Look at it. Is that where you live in Thailand? Is that the ocean right there? Beautiful.
Screensaver, 1 second. Yeah, 1 second.
Fear does not prevent.
No, we're very close to the Mekong River.
What a great quote that was. That was a great quote. Fear does not prevent death, it prevents life. It's like, you know, feel the fear and do it anyway. Wow, is that beautiful?
Absolutely. Yeah. So
nice.
So here's the web basic stuff, teaching people the basics about setting up the.
Okay. Wow, Kevin.
MT4 platform.
I'm gonna have to visit you in Thailand. It's my dream. I've never been there. It's very attractive, beautiful. I'm kind of like Walter Mitty. I'm like Walter Mitty. I want to go everywhere, and I sit here in San Diego. Anyway, what a pleasure having you, Kevin. Really nice to meet you. And if you could give one piece of advice to anyone hearing our voice or that will watch the video later on, what would it be? Are you with me?
And if you've only got a little, so, you know, whatever you can give to help other strong believers, even if you've only got a little.
All right, you were breaking up on that. You want to repeat it one more time without your website changing pages? Maybe that's interfering. What's the most important advice you could give to not just new traders, but any trader?
Well, not really trading, just in life in general, is give, even if you've only got a little. And that means whether it be speaking to someone to help them with their trading, you know, just helping people out in general, monetary, even if it's a small donation, help people out, and that will come back to you tenfold. It really will. I'm a strong believer in that. So give, even if you've only got a little. What
good is anything until you share it with another? Everybody, thank Kevin Hunt for being with us. Kevin, the best way to follow you is Twitter or your website. Does your website have the same title as your Twitter handle? Yeah.
The website is UK2Asia.com, and my Twitter handle is @UK2Asia.
Thank you so much, my trading warrior brother. Say hello to Kim for me, and good hunting in 2018. I hope pips rain down on you and your partner. And,
thanks, Dale. It's been a pleasure speaking with you.
And every really student that you touch.
Thanks very much. It's been a pleasure speaking with you, Dale.
All right, Kevin.
Take care.
Like it or not, you're my trading warrior brother now.
Appreciate that.
Can't get out of that. that club once you're in it. It's like the mafia.
And get
All
over
right,
to Thailand as soon as you can. I'll show you around.
Okay, buddy. Thank you so much, Kevin. Thank you,
Take care.
Faith.
Bye now.
Thank you, investing.com, for your attention today. Remember, don't just count your pips, count your blessings. Be back tomorrow for TGIF Friday. And above all, don't just count your pips, count your blessings. I count working with the team here at ForexAnalytix and collaborating with each and every one of you here and in the private chat room that you have to become a member to hang out with us after FACE closes as a blessing in my life. Adios.